everyone, welcome to my channel. My name is Folashade. If you are new here, you're welcome. If you are a returning subscriber, welcome back. I'm so excited that you're watching this video today. I see that a lot of Canadians do not maximize the potential that a TFSA can give. In today's video, I will be talking about the TFSA, what a TFSA account is, and all you need to know about it. If you've ever been to Canada, you have probably heard of the word TFSA. And given the fact that you are on this page, I can categorically say something private about you that I shouldn't know. Here it goes. You're watching this video from Canada. No, it's not a magic. I just know things. A tax-free savings account, TFSA, is a Canadian savings account in which contributions, interest, dividends, and capital gains grow tax-free. Money withdrawn from it is also tax-free. Anyway, the first thing you should know about a TFSA is to never call it a TFSA. It's a subtle difference, but it's easy to get excited and switch the words. So please don't do that. It is called a tax-free savings account, not a tax savings free account. And it is very important that you understand. And then the next thing I'm going to say is this TFSA is not a savings account. It's actually an investment account. Yes, there is savings in the name, but that doesn't mean anything. It's just like the two countries, Greenland and Iceland. You would expect Greenland would be green and Iceland would be icy. But the reverse is the case. Don't get me wrong, you can use it as a savings account, but that's a decision that you might later regret long term. Once you can see it as an investment account, you're going to be ahead of most of your people. Now, let's go into the history. The most important days in your life are the day that you were born and the day you find out why. Let's find out these two important things about the TFSA. The TFSA was born by the Canadian government in 2009, and its sole purpose in life was to encourage Canadian residents to invest more and give them a better opportunity for financial growth and maybe a happy retirement. Usually, when you open an investment account, you put money in it, buy assets, and watch it grow over a long period of time. When you're satisfied with its growth, you sell the assets, you withdraw the cash, and every income you accumulated over the years is taxed by the government. When the government introduced the TFSA, it changed the game of investing. When you invest with the TFSA, you are free to invest and withdraw your income without any tax or fee attached to it. And that's why it's called tax-free savings account. Now, let's talk about contribution room, and contribution limits. Although there are no tax fees, there are limits to how much money you can put into your TFSA. The money you put in your TFSA is called contributions. Since the inception of TFSA in 2009, the Canadian government gives a certain contribution limit every year. If you don't exhaust the contribution room given to you for that year, the unused contribution room is carried over to the next year. Let me break it down for you. In 2009, the contribution room was $5,000. If you didn't contribute any money to your TFSA in 2009, you would have $10,000 contributing room in the next year, and like that. What is the criteria for having a TFSA? For you to open a TFSA account, there are two criteria that you probably met already. But let's see. 1, you're a Canadian resident. 2, you are 18 years or older. 3, you have a valid SIN. So now let's talk about over contribution and how you calculate your contribution limit. One thing you must note is that you have to watch your TFSA. If you think the Canadian government would inform you when you over-contribute, you are in La-La Land. And La-La Land isn't good for investment. The penalty that comes with over-contributing is 1% tax per month of the excess contribution. So if you contribute the maximum to your account and then go on to over-contribute with an excess of, let's say, $5,000, you would pay 1% of $5,000, which is $50 for every month that excess contribution is in your account. Just to state the obvious, I know some of you are already thinking, I still win now. If I make 7% profits and they take 1%, I still have 6% profits. You're wrong. If the CRA realize that you are over-contributing, they would take the whole of your profit. Yeah, so in 2010, just 1 year after introducing TFSA, people were probably over-contributing on purpose. And so they introduced a policy that would subject the profit you get from the excess contribution to a 100% advantage tax. What that means is if you over-contribute $5,000 and get a profit of $1,000, in addition to 1% penalty, every month they will take away the $1,000 you gain from the excess contribution. Now to the burning question, how do you calculate your contribution limits? You are able to take 3 factors into place. 1, your age, 2, the year you became a Canadian resident, and 3, do you have a valid SIN? Assuming you already have a valid SIN, if you were 18 before you became a Canadian resident, then you don't need to factor in age. For example, if Fola, a 23-year-old, becomes a Canadian resident in 2020, whether or not I open the TFSA in 2020, my contribution room starts accumulating the year I become a Canadian resident. A lot of us do not maximize the potential of a TFSA, and that is why I have brought this video to your doorstep.